Ladies and gentlemen, good day. I am Inderpal Singh from Bharat Heavy Electricals Limited. Welcome to BHEL Q4FY22 earning conference call. This call is being organized by my team. To begin with, all participants are on the mute mode only. There will be an opportunity for you to ask questions after opening remarks of the management. The participants who wish to ask the questions can signal the operator by raising the hand, who will then unmute you. Please note that this conference is being recorded. Thank you. And now I hand over the conference to Dr. Nalin Singhal, Chairman and Managing Director of BHEL. Over to you, CMD.
Good evening, everyone. I am Nalin Singhal, CMD BHEL, and I have with me Shri Subodh Gupta, Director Finance, and Srimati Renuka Gera, Director Industrial Systems and Products, with additional charge of Director Engineering R&D, and other officers of the company. A very warm welcome to all of you. As we all know, the power sector is in the midst of a major energy transition, and the country has made specific commitments in COP26 in this context. At the same time, the focus on infrastructure development, coupled with sector-specific PLI schemes, as well as the government's Atmanirbhar Bharat initiative, would result in continuous growth of power demand, for which the country is looking towards a sustainable energy mix comprising of renewables coupled with hydro, nuclear, as well as clean coal. While this is likely to result in substantial opportunities in the hydro and nuclear sectors, at the same time, in view of India's huge coal reserves and lack of oil and gas reserves, the coal is expected to remain the primary energy driver, with emphasis shifting towards clean coal. We are already witnessing a rebound in the thermal sector with a visible pipeline of over 7,700 megawatt of coal-based power plants. Your company is capitalizing on these emerging opportunities with a two-pronged strategy focusing firstly on indigenous development of clean coal technologies such as coal to chemical, especially coal gasification, providing comprehensive solutions for emission control, development of lower rating supercritical plants, and secondly, on growth in non-coal business, including nuclear, hydro, railways, defense, and aerospace, amongst others. BHEL's focus on nuclear and hydro sectors has resulted in strong order booking in these areas in the recent years, and we have maintained market leadership and are further expanding our available offerings. In fact, in the last financial year, under the fleet mode procurement by NPCIL, the company has received the largest ever order for EPC of turbine island package for 6 units of 700 MWE pressurized heavy water reactors from NPCIL. In addition to this, orders for supply of reactor header assemblies as well as for steam generators have also been received in fleet mode. I am proud to say that BHEL continues to remain the sole Indian company to supply nuclear turbine generators. Your company is also making efforts to enter into the strategic partnerships with global OEMs to leverage the upcoming opportunities in areas of rail transportation, defense and aerospace, and new energy sources. This has resulted in BHEL securing an order for 16 sets of 3-phase IGBT-based propulsion systems for Vande Bharat Express trains from ICF Chennai, amidst highly competitive bidding, marking its entry into domestic semi-high-speed mobility segment. In FY21-22, BHEL has booked orders worth 23,693 crores. With this, the total order book as on 31st March 2022 stands at rupees 1,02,542 crores, out of which power sector is rupees 85,664 crores. Industry sector is rupees 11,836 crores, and export projects account for rupees 5,042 crores. During the year, the power segment has booked orders worth rupees 17,931 crores. Major orders received in the power segment include nuclear orders mentioned earlier and orders for flue gas desulfurization packages, amongst others. Orders worth rupees 5,660 crores were booked by the industry segment during the year. Prominent orders during the year include supply of upgraded SRGM, the main gun on Indian warships, for which BHEL is the sole supplier, strategic equipment for the Ministry of Defense, as well as propulsion systems for Vande Bharat trains mentioned earlier, amongst others. Your company continues its focus on speeding up project execution, improving service and quality standards, reducing material cost, as well as indigenous technology development. Important milestones were achieved in project execution during the year, including successful commissioning of the 800 kV 6000 megawatt UHVDC link between the western region grid and the southern region grid. During the year, BHEL has commissioned and synchronized 4,119 megawatt of power plants in the utility, solar, and captive segments, and an additional 1,460 megawatt of steam generators. The company has also commissioned its first FGD plant at NTPC Dadri and the country's largest air-cooled condenser at North Karanpura. This air-cooled condenser was commissioned by BHEL engineers in the absence of OEM support due to geopolitical situation, thus demonstrating the engineering prowess of Team BHEL. We are in the final stages of commissioning of the 100 megawatt floating solar power plant at NTPC Ramagundam, by far the largest floating solar power plant in the country. With this, I am happy to say that two-thirds of the total floating solar capacity in the country is installed and commissioned by BHEL. Strengthening technology base in existing and new areas remains a top priority. During the year, BHEL indigenously designed, installed, and demonstrated a 0.25 TPD coal to methanol technology demonstration plant using high ash Indian coal, the first of its kind technology demonstration. We are now working further on commercializing this technology to contribute to the national coal gasification mission of the Government of India. This fulfills the twin objective of clean coal and indigenously manufacturing many chemicals presently imported by the country. Coming to the financials of the company in the last financial year, the company has made strenuous efforts during the last financial year, which enabled us to not only break even during FY21-22, but also strengthen our balance sheet. This break-even was achieved despite the second COVID wave impacting our operations in Q1 of FY21-22. The total revenue from operations of FY21-22 is rupees 21,211 crores, which is 24% higher than the corresponding figure of rupees 17,308 crores in FY2021. The profit before tax is rupees 437 crores for FY21-22 against a loss of rupees 3,612 crores in the corresponding period of the previous year. Overall, the company achieved an EBITDA of rupees 1,100 crores despite the significant pressure on margins due to sharp spike in metal prices and increase in other material and fuel costs. The significant cost reduction drive in the company against manufacturing, administrative, sales and distribution expenses in the year resulted in such expenses being contained at 10% of turnover compared to 9% in the previous year. Profit after tax stands at rupees 410 crores against a loss of 2,717 crores in the previous year. This is significantly aided by efforts in taxation area, which resulted in refunds of rupees 667 crores. For the Q4 of FY21-22, the company recorded total revenue from operations at rupees 7,600 crores, up by 13% compared to rupees 6,752 crores in the corresponding period of the previous year. Profit before tax for Q4 of FY21-22 is rupees 1,098 crores compared to a loss of rupees 1,385 crores in the corresponding period of the previous year. Profit after tax for Q4 FY21-22 is rupees 909 crores compared to a loss of rupees 1,033 crores in the corresponding period in the previous year. The company achieved an EBITDA of rupees 1,280 crores in Q4 of FY21-22. The persistent efforts to reduce costs resulted in manufacturing, administrative, sales and distribution expenses in Q4 to be restricted to 5.5% as compared to 7% in the corresponding period in the previous year. Traditionally, the company has seen higher investments in working capital with higher revenues. However, the current financial year working capital of rupees 586 crores has been released despite revenues rising by 24%. Overall, there is a net positive cash generation of rupees 660 crores from operations as against rupees 560 crores in the last year. The company has cash and bank balances net of borrowings of rupees 2,409 crores as compared to rupees 1,686 crores at the end of FY21-22. At the end of FY2021. Trade receivables are at rupees 33,169 crores, which are only marginally higher than March 21 levels of rupees 31,292 crores, despite revenues rising by 24%. The trade receivables at rupees 6,229 crores are the lowest in the last 10 years. Thank you all once again for joining this conference call. We will take questions now.
Thanks, sir. We will now begin question and answer session. Participants who want to ask questions, please signal the operator by raising the hand. We will give a 30-second pause to enable you to raise the hand, so please raise your hand. The first question is from Mohit Kumar, DAM Capital. I again request you to please raise your hand to enable the operator to unmute you at the time of asking the question. So please go ahead, Mr. Mohit Kumar.
Hi. Good afternoon, sir. Congratulations on the company on time. So my question is, what is the reason their expenses the quarter, and what was the one-off?
You are not audible. Will you please check your mic?
Okay. Am I audible now?
Yeah.
Better now, yes.
So my question is, why the expenses negative in the quarter? What was the one-off?
Why?
Which was negative? We were saying something.
Other expenses.
Other expenses.
The other expenses are negative because of the provision effect. The provisions are minus 840. Do you want the breakup of other expenses?
Yes, sir. Can you give the breakup?
Okay, just tell Yogesh.
Yeah, for Q4, total other expenses are minus 385 with the breakup of 423 crores of other expenses of manufacturing, administrative, selling and distribution expenses. Provisions are minus 842. Power and fuel cost is 125 crores and there is ERV gain of 91 crores. That sums up to, yeah.
My second question is, sir, on the FGD ordering. So we were expecting FGD ordering to pick up in FY22 given the timeline. But not enough, FGD in the FY22. Do you think it will pick up in FY23?
Yes, we should expect it to pick up because at the moment the state and the private sector ordering has not yet happened, and there are deadlines there. So I think that should pick up.
But are you seeing the signs of the ordering picking up materially in the sense? Can we expect around 20-30 gig of FGD ordering in FY23?
That please, ED marketing will answer that.
FGD, as rightly said by CMD, that most of the orders for the central sector have already been finalized. If I talk about 1,67,000 megawatt was identified by CEA for FGD installations. Out of that, approximately 110 gigawatt, that is 1,10,000 megawatt of the sets have already been finalized, and we have a market share of 30%. But there might we going forward, we might feel a dampener there because now the government, even the Ministry of Power, is also thinking that 2 years extension they are asking. We have given some time limits there
with the latest norms.
But ultimately, the pressure on the norms is likely to. But no, the visibility is not yet there. But we are expecting. We are expecting the visibility to happen. It is not yet. If you want to know whether specifically orders have come out, that has not yet happened. But given our commitments, that is bound to happen in the near future.
Thirdly, on this thermal power ordering, BTG ordering, are you seeing any signs of recovery? In fact, recently NTPC says that they are trying to revive at least 6 gigawatt of new ordering, especially Lara, Talcher, Ratpalli, and Singrauli.
So please go on.
Yeah, so are the tenders out? As Talcher was supposed to get finalized, right? And have you seen any other tender, in the market, which is, or let's say, inquiry from the ACB and NTPC and likes of NTPC?
So as I already said, we are seeing a pipeline of almost 7,700 megawatt. Because Talcher, Talabira, Adani, Bhandora, then Singrauli, Lara, all these are there. So we are expecting this ordering to happen in the very near future. With the crunch on the power supply side, this is going to be speeded up.
Lastly, on the full gasification, the government has a strong target of investment of 3 trillion by FY30. If I'm correct. Are you seeing any sort of ordering or tender which will materialize the next 36 months?
Yes, in fact, in the budget, 4 plants are already announced, and we are already moving, with some of the leading power coal and lignite producers on that front. So this is something I think which is going to get speeded up further.
Understood, sir. Thank you, sir. Thank you.
Thank you, Mohit.
So the next question is from Puneet Gulati, HSBC. Mr. Gulati, we are unmuting you. Now you can go ahead and ask your question. Mr. Puneet Gulati. So,
yeah, can you hear me?
Yeah, we can.
Yes, please go on.
Okay, great. Yeah, thank you so much. So my first question is, are you seeing any increase in talks towards nuclear power plant? Any prospective orders that you foresee in next couple of years?
So nuclear already the feed mode ordering has happened, and as I mentioned, we have already received the order for 6 sets of 700 MWE TGs, which is worth 10,800 crores.
Okay. Anything else that you expect in the coming year?
Not immediately, but yes, in the future, I think nuclear will continue to play a very strong role.
Okay, got it. Yeah, my second question is on the industrial side. Can you talk about any new JVs that you've recently formed or entered new product lines?
So on the industrial side, as I already mentioned, the defense is a major area. In fact, last year's order booking has been the highest we have ever had, 1,500 crores, as against almost we were below 500 crores always before that. And in the current year, we are looking at that going up further. So that's a very major focus area, and I think the existing geopolitical situation has also added to the urgency to indigenize in that area. Then, as I mentioned, on the railway front, we have already got the first order for Vande Bharat, and we are again focusing on that segment in a very, very big way. Other area we are looking at is space, where we are looking at some orders for tankages, etc. From ISRO. Anything else you'd like to add, Mrs. Gera?
I think, sir, we are looking at even having some orders on a we join hands with some developers in renewables also and try to get some models.
So I think what we have done in floating solar, I think that is something we will try to build on further.
Right now we are having, as you rightly said, 2/3 of the share of the complete floating market in India.
So going forward, the diversification initiative, we expect that to deliver results.
Okay, but why not go towards module manufacturing where government is now offering PLI? Any thoughts there?
We have explored that, but at this point, I think the call is not to get into this.
Okay.
Yeah, go on. Please go on.
Yeah, no, that's fine. And any progress on the monetization of any assets? Any timeline you can share?
So there actually, the government has now set up a separate body to handle asset monetization.
Okay.
So that will now going to go into a different sort of phase.
Okay, so it will now be completely dictated by government.
We have identified certain properties, but that process, you see, the procedures will have to fall in place. So that I think we are expecting that clarity to emerge quite soon on that.
Understood. That's very helpful. Thank you so much and all the best.
Thank you, Puneet.
I repeat that the participants who wish to ask the questions, please signal the operator by raising the hands. Next question is line from Rahul Gadare, Titan Securities. You are now unmute. You can ask the question.
Yeah, hi. Good evening. You're able to hear me, right?
Good evening. Yes, we can hear you.
Yeah. Sir, I've got a couple of questions. I was not able to get the tax refund number that you said. Can you please repeat that number, please?
Which number?
Tax refund numbers.
The tax refund.
I'll request Director Finance to give us that.
Tax refunds. See, we have a PBT of 437 crores and PAT of 410. The effect of 27 crores only tax liability is appearing for two reasons. Current tax we are seeing minus 77 crores. Basically, that includes the impact of refund, as CMD sir said in the opening remarks. That refund has contributed as the additional income also in that provision part, and the interest income part is also there, which we will discuss separately. But 77 crores basically includes 126 crores of tax provision, basically income for us under that head.
Let me clarify further. Basically, there are two components of the whole tax refund. One is the interest component, which has gone into the income, and second is the tax, which we had earlier expensed, now booked to income. So because in the tribunal we won these all disputed tax cases prior to 2010-11, so that refund basically we could get the last year. So the effect of that, ultimately is had to just see the gap between PBT and PAT. It's just 27 crore. It is because of the earlier tax refund, which were expensed, not taken as income in two heads. One in interest portion taken to other income, and the tax part taken to tax expense.
Sure. Thank you. Sir, my second question is on, given that we've seen significant rise in commodities, I want to know how much of your order book has price pass-through built in?
Sorry, can you repeat that, please?
Yeah. So, given the way commodities have increased, I want to know how much of your total order book has a price pass-through.
Well, you see, the price variation clauses are largely there in many of our orders. However, maybe you let us say about 50-50 with or without. But the major issue there also is that the pass-through percentage even then does get limited. So that is an impact we are facing and we are working again on.
Actually, what CMD is telling, the impact of metal cost itself is very high. If you see the rise in the prices of material of all the TMT, steel, copper, various metal, global impact is much more higher as compared to the PVC what we get from customer. Basically, there is a limit also. There is a cap of PVC. Because of that restriction, what is happening, our revenues are lower and the metal cost is going up. So that is really one added challenge and risk for the company, though various cost optimization efforts are on in the company. And we are trying to, even we have saved a substantial amount last year also, in the range of 600, 700 crore we could save to our engineering optimization. So those things are going on. but certainly there was an impact. And because of that impact, you will appreciate one fact that, whatever profit we have shown here, 437, as PBT, this is after taking material cost as 72%, which is all-time high. If you see the financials of BHEL prior financials, it was always in the range of 60%. So that really further impacted us. Otherwise, things are well under control, and whatever we have already factored into this material cost into our current financials also. So some of the future impact also.
So essentially, to sum it up, we are, that is the major concern area, and we are trying to mitigate that through engineering efforts as well as procurement efforts from both sides.
Okay, but that PVC restriction, is there a percentage cap of 10%, 15%?
Yeah,
you can share.
Some of the
You see, there is a cap also. The other issue is PVCs are largely index based. So the index may not rise as much as, let us say, a steel price or a copper price or a cement price.
Understood.
And one more thing, sir, basically time extension request, because of COVID reasons, we have already submitted to customer. Once we get the time extension, approved by the customer,
yes,
some benefit of PVC will also happen.
The capsule also, yes. Yeah, but anyway, though that's the major effort, that's a major front we are working on in the current year.
Yeah. So my last question is on capex. I remember your capex was planned for about 250 odd crore rupees for FY23. I want to know, is there any change in FY23, and if you can also talk about FY24 capex? That is one part. And you had also indicated, that if you were to get certain orders from DRDO, the capex will increase. So, if you can throw some light on, the entire capex for the next FY23 and 24, that will be helpful. Thank you.
So the plan as of now is 231 crores for the next year. But if you're looking at specific areas, then there is, we are already looking at for ISRO for tankages, there is about 200. Then,
sorry, sir, your voice was cracking. I couldn't hear you. Can you repeat the number?
I think there is a lot of interruption from somebody.
So you ask him to move.
Can you please mute your mic, please? I think there's an interruption coming from that side. Yeah, okay, fine. So the capex for the current year is 231 crores for FY23. And if you're looking at the long term, the major areas, we are already, taking up a capex for the ISRO tankages, which will be almost 200 plus crores. And another about 140 odd crores for the advanced, for the upgraded SRGMs. And in addition to that, there will be substantial capex required in the coal gasification side. So these are the various ones which are upcoming that we will be having going ahead.
Okay, then. Thank you very much.
Thank you. Thank you, Rahul.
The next question is from Mr. Atul. Mr. Atul, please state your full name and organization name before asking the question. Mr. Atul, I think Mr. Atul from Citi.
Hello, sir. Can you hear me, sir?
Yeah.
Am I audible? Yes, sir. Hi. Yeah. I am Atul Tiwari from Citi Research, sir. Sir, just one question on this 7,700 megawatt pipeline that is emerging. Could you break it across different projects, and could you give your rough estimate of any timelines of award or status of readiness of these projects?
I'll request Director Power to respond to that.
Good afternoon. Actually, there are certain tenders which are already where the bidding is in advanced stage. That is close to some 4,000 megawatt. But we are expecting some other tenders which are in the maybe next few months. So timeline for 4,000, as I said, is already the bidding is in advanced stage. Another 3,000 to 4,000 megawatt. We are expecting that within 1 year span, these tenders should be out.
And sir, which are these 4,000 megawatt projects which are in advanced stages of bidding?
Actually, there is one Talabira, 3 units of 800 megawatt, which is the very lignite corporation in Odisha. And the other one is Rani Mandora. There are 2 units of 800 megawatt. So these are where bidding is in the advanced stages, and we have already submitted bidding. We are also preparing for bids of the other tenders which are like Talcher. We are preparing to submit the bid. So that is another 2 units of 660 megawatt. So this is the current pipeline is 5,320.
Plus the two, Singrauli and Lara.
Plus after that we are expecting Singrauli 2 units of 800 megawatt, and Lara stage 2 2 units of 800 megawatt.
Okay, sir, you said Talabira 3 into 800 megawatt and Adani 2 into 800. Both are under bidding, right? Your voice was little shaky, that's why.
Yeah, that's right. That's right. Talabira
Okay.
and Adani Mandora.
Okay, sir. Okay, thank you. Thank you much.
The next question is from Mr. Grish Archipalia from Morgan Stanley. Grish.
Hi, sir. Can you hear me? Sorry, I
Yes,
joined the call a little late. Apologies. I just wanted to understand the breakup of order book and the receivable breakup, if you can help with that, and order info. These three numbers breakup, please.
Order book breakup.
Will give, sir. Do you want sector wise?
Yes, sir.
Here. Your share. Yeah.
The order receipt for FY21-22 is 23,693 crores. Power sector is 17,931 crores. Industry sector is 5,660, and international operations 102. So that makes it 23,693 crores.
You want the breakup of outstanding order book as well?
No.
Yes, sir.
So power sector outstanding is 85,664. Industry is 11,836. International operation 5,042. So put combined together is 102,542.
And if you could help with the split of receivables, sir.
Receivables. If you look at the breakup of receivables in central PSU, it is 36% in central PSU, state utility 41%, private customer 14%, export 8%. Of total 33,168, I'm talking of 33,168, including contract assets.
So last question, this other expense split, can you provide for the full year?
Yeah. For the full year, the other expenses 162 crores that have been mentioned here. The other expenses of manufacturing, administration, selling and distribution are 1355, which was 1480 last year. Current year it is down to 1355 crores. Provisions are minus 1526. Power and fuel cost is 415 crores, and there is ERV gain of 82 crores.
I want to clarify one more thing, this number would appear to be much lower as compared to last year, because last year the company management has taken a concerted call to provide for 1,800 crore as merit-based provisions last year. So this year there was no requirement of creating merit-based provisions. So better withdrawals have happened this year, and because of the better withdrawals, we could, basically improve the number of provisions. So that's why the number is negative. Otherwise, whatever provision creation we have done, it is as per the policy, in line with the policy. But there was no requirement of merit-based provision, so it has not happened. Secondly, the manufacturing expenses of 1355 we are talking about, I think it is the lowest in last 20 years. The company has made a very good effort, that CMD has said in the initial remarks, that level has come from 9 to 7% of top line, despite top line going up, other expenses going down. So it's a major achievement. It's a breakthrough achievement. So company's focus is on, because we know that market is competitive. So company's focus is also how to basically improve the bottom line through middle line also.
And the current depreciation run rate would continue, sir, for the following year?
Yeah, same.
Thank you so much.
Thank you, Girish.
So the next question is from Mr. Ashwini Sharma Mr. Sharma, please state the name of your organization before asking the question. Ashwini ji.
Can you please unmute yourself, Mr. Ashwini Sharma? Can you please unmute yourself?
Okay. We can go to the next participant. The next question is from Mohit Kumar, Dam Capital. Mr. Mohit, we are unmuting you, so you can go ahead with your question.
Hello. Yes, sir. Can you give us the breakup of contract assets and trade receivables number at the end of FY22? And what was this number at the end of FY21?
I'll request Director of Finance to give us the details.
We just note down the trade receivables at the end of March 22 is 6,229 and the contract asset 26940. And last year, March 21, trade receivable were 7213 and contract assets were 24079. One more fact I would like to share with all the investors here, regarding the increase in contract assets, that, we have basically, if you look at the payment terms, what we had in many of the NTPC projects, which are going on or other projects, because of that unfavorable terms, which we were usually getting in past, now we are not getting. Because of that also, there is an addition in contract asset to the tune of 3,600 crore.
Understood.
Those will be coming, but after some time. Because we cannot show under investment in the company, so those are also reflected as contract asset. Otherwise, it's indirectly a funding for the projects from BHEL side.
Understood. Secondly, on the power PPP order, are they mostly BTC or EPC orders? I'm talking about the NLC Talabira, Adani, Talcher, Singoli Lara.
These are largely EPC orders.
Okay, so the quantum could be very high.
Other than Adani, which is a BTG, they are all EPC orders.
Lastly on this, which are the segments you are very bullish on the order inflow for FY23 and let's say for the next 24 months?
As I already mentioned, defense is a major sector where we are bullish on, and railways. These are two sectors we would be quite bullish on, and then of course on the thermal side, of course, which has been a traditional sector. There are we've already given the details. So some of these should certainly happen in this year, and if not this year, most of them will complete by FY24.
So one more question, sir. Which are the capabilities you are building in the medium term to cater to the, let's say, media to growth?
So if you are looking at generically, we are looking at engineering, we are looking at updating the manufacturing. But if we come to specifics, you see a very major one which I mentioned was coal to methanol. Now that is a major capability we are looking going forward. Defense side, and especially their support and service support, engineering support. Those are the various other things that we are looking at the moment.
Anything in particular looking at railway side, sir?
Yes, railway, of course, is a major area that we are working on. So as I already told you, we have got the first order for the train for the Vande Bharat trains, and that's a very focused segment where we are looking to move ahead. We're also looking at technology tie-ups also are in the pipeline for supporting that sector.
Anything on the hydrogen side, sir?
Hydrogen is another area which we have been working on. So we have already, as I had mentioned in a previous con call, we had set up a dedicated business group around hydrogen. We have already developed 5 kilowatt fuel cell and are looking to now upgrade that capability. And in parallel, we are in discussions with various international majors for technology tie-ups for the hydrogen, for the electrolyzer. So the hydrogen economy is something which is going to be important going ahead.
Understood, sir. Thank you and all the best, sir. Thank you.
Thank you, Mohit.
The next question is from Mr. Amit Anwani from Prabhudas Lilladher Private Limited. Mr. Anwani. You have to unmute yourself, Mr. Anwani.
Can you please unmute yourself and speak, Amit?
Okay, Mr. Ashwini Sharma, we are unmuting yourself. Now, if you want to ask the question, you can ask your question. Ashwini. So, if there is any other question, please raise your hands. Mr. Aditya, next question is from Mr. Aditya. Please state your full name and organization name.
Mr. Aditya, will you please unmute yourself?
I think everybody.
Mr. Abhinit Anand, you can go ahead with your question. Please unmute.
Yeah, thanks for the opportunity. I just wanted to know the terms of the contract for the new coal-based plants that are coming up. I remember a few years back, they had gone very unfavorable because somewhere around 10% was to be given after the performance guarantee and all. Can you spell out what is the terms now? In terms of payments?
I'll request Director Power to answer that question.
There have been certain contracts where we have encountered very unfavorable payment terms. But after that, in particular, we have engaged with NTPC, and for the future tenders, they have modified the terms which are quite favorable or maybe close to what traditionally it used to be. For example, we had difficult payment terms in Patratu and some FGD projects also, but for the new tenders of NTPC like Talcher, the payment terms have been amended in the tender documents.
And similar terms was also Talabira, etc. also has similar terms.
I couldn't get you.
Talabira terms.
It is same, sir, more or less like the earlier tenders. Now you have that 10% advance and you have some 75% on receipt of the material. But 10% will always remain as a deferred payment towards that PG test and the trial operation. That is always there. 90% of the payment will be available to us. This is what I would like to say.
So in this regard, you may also be aware that even the government has issued guidelines in October, regarding payment terms to be incorporated in major tenders. So that I think is also going in the same direction.
Has to be in commensurate with our website. Yes, sir.
Thank you, sir.
So we will once again try. Last question, Mr. Amit Anwani. You have to also unmute yourself after we unmute you from Prabhudas Lilladher. So Mr. Amit, please go ahead and ask your question. Okay. Now there is no other question. So with the permission of Our chairman, sir, can you close the?
Thank you, ladies and gentlemen, for your patient hearing and an interactive question Q&A session. Thank you very much for your interest in BHEL. Goodbye.
Ladies and gentlemen, thank you for joining us. You may now disconnect your lines.